Hey everyone, welcome back. Death Taxes in this podcast, episode 10.
Wow.
The big 1-0.
Well done.
Yeah. Got to give ourselves a pat on the
We've
back.
done so many we've lost track.
We're accountants that can only count to 10. Well, let's hope that we don't have to work with numbers bigger than that. Now, honestly, and like if anyone's listened to all of them, call me because I'll give you a present. No, I'm just kidding. But all right, today we're going to go into accountants and like the different types of accountants and what they all do, just to explain to everyone how it works. Because I mean, like half of the general public think we're financial planners, to be honest. And I think that's confusing because like on all the American shows, financial planners and accountants are the same over there, I think. Like the CPAs over there are talking about investments and stuff. Obviously in Australia, financial planners talk about investments and accountants talk about what we're about to go into now. So it is funny. Like I think the perception of accountants is, well, like sometimes true, but obviously driven by like American media and stuff.
Yeah, I also love like people go up to an auditor and ask them if they can do their tax return. Like,
Yeah,
they can't. Yeah. So should we dig into what the types of accountants are?
Yeah. Let's do it.
Go for it.
Yeah, okay. So you got 4 different types of accountants. The most exciting ones are auditors. Even the accountants, like the other accountants, think auditors are boring, which says a lot because, like, obviously everyone thinks that accountants are boring, right? Like, So if an accountant thinks an auditor is boring, that just gives you the show. Anyways, we shouldn't be too mean to them. Like, they got to pass our numbers. So one type's auditor. The next type, which is the sexy type of accounting, management accounting. Then you got tax accountants and financial accountants. So each of these guys has a different role, which we'll go into. Yeah, which one do you want to start with?
I'll start with management accountants.
Okay, this is the sexy
start
stuff.
With a good one. Yeah.
Everyone loves this. Like when you're studying at uni, like everyone talks about wanting to be a management accountant, business partnering or whatever. Like, you know what I mean? Like that's how they walk around. I'm going to go for the role of business partnering. Like everyone thinks it's great.
To me, like at uni, this was like it looks easy. But it's one of the hardest subjects at uni, I think.
Oh man, it's like. So it actually was one of the ones that I ended up doing that I became the best at, but it was definitely the hardest for me at uni. The reason for that is like management accountants try to look towards the future. All other types of accounting looks at like the past, basically. So like if you think of an accountant, their job, all of them, except for management or even management of it, is to present numbers in a certain way so that everyone else, the general public, is able to, perceive them, read them really clearly. And then like we're trying to sell a story through numbers. So when management accountants are looking at it, they're selling, forecasts and things that are looking into the future. And then I guess everyone else is looking into the past. So management accountants, good ones will do like a lot of reporting and, segment reporting and stuff like that. Like CFOs, like that's all the stuff that they're talking about because they're generally talking to the market and trying to say how great we are and how great we're going to be next year. So that's why everyone likes it. It's the sexy type of accounting.
Yeah, probably. Like I don't hate it, but it's different. It's different work.
It's made up.
It's made up. Yeah.
No, so like if you're
I can do a cash flow statement to present numbers, forecasts, but it's all bullshit like most of the time. So
no, it's more impressive if you do one that's actually correct because I agree. Like everyone just makes up assumptions and makes up stuff. Like it never ends up coming up the exact way that you want it to. And there's always people that want to make it bigger for, if you're going to borrow, you get a management accountant in and they'll be like, oh, let's pretend we're making $10 million profit and you're making $0 profit. Like, you know what I mean? Yeah.
I have had some jobs where you're forecasting and they haven't even got a $1 revenue yet and then forecasting based on growth and all this stuff. And it's like, who is even seeing this? Like,
you know what they should do? They should get the tax accountant to come in and look at the forecast and be like, oh, we're going to do your installments based on the forecast and see how real it is then. Because like basically everyone says in a forecast that they're going to make way more profit than they're ever going to make. They're not supposed to, but like, let's be honest, that's what sort of happens. But if they were doing installments based on that and they couldn't change it, maybe they bring it back into be a bit more realistic. Yeah, okay. So management accountants, basically, they're the ones that sit on the board. They do all the reporting. They do sort of look historically, like they might look at like ratios and things like that to try and, come out with sort of some sort of meaning to it.
Yeah.
Yeah. But that's their main job.
And what about the auditors?
So the auditors...
You're not getting any Christmas presents from auditors this year.
No, they know all the jokes, mate. Like,
they probably wrote most of them.
No, yeah. So the auditors and the financial accountants, they work the most together. Like, okay, so we'll do auditors first. So the auditors basically check the financial accountants presentation, numbers, everything. They're really just there to keep them honest.
Yeah, and make sure they're in line with the rules and how they're presented, in line with what's meant to be presented.
Yeah. So financial accountants and auditors, they generally work on larger companies. So we've got probably 10, maybe 15 places, like clients that need to get audited. But when you're getting audited, like you got to fall into those. Either you're a not-for-profit, and those ones can be sort of small when they're getting audited. But otherwise, you're like a big company, so you've got over 50 million assets, I think. What is it like? You don't know off the top of your head.
X amount of 150 employees or something.
That's only 50 employees, I think.
50,
but it's
sorry,
like, so 50 million net assets or like, anyways.
You got to meet 2 of the 3, right?
Yeah, 2 of the 3.
Yeah.
So like you're generally a very big company. And the reason that they get audited is because you're such a big company, there's so many people that need to rely on those numbers. Like all the staff want to know how the company's actually going. There might be creditors that are lending you money or banks or whatever. So generally...
And the shareholders.
Yeah, true. And shareholders. So generally the ASIC will make you get your numbers audited and then everyone can look at them and then everyone knows that they're correct.
Yeah.
So it's got their stamp of approval. There's some famous cases that we learn at uni around some like Enron and stuff like that, like some cheeky sort of places that did like funny things that the auditors still signed off on. But it's generally in place to sort of avoid that. So I'll go financial accountants after that.
Yeah, correct.
Yeah, so like this will explain what the auditors are sort of doing. So there's like accounting standards. So financial accounts are like, your balance sheet, P&L, cash flow, the notes to the statements, they
key personnel and all these kind of things.
Yeah, and they've got like 2 types of formats. So like you can do general purpose, which is common pretty much across the whole entire world. So everyone uses these international accounting standards. They roll into Australian accounting standards, but they're all very, very, very similar, if not the exact same. And the purpose for financial accountants is to present the numbers in a way that everyone can read them. And the reason that they want everyone's numbers to look exactly the same is so that it's very easy for you to pick up any sort of financial statement and then look at it. So financial accountants need to present the numbers in a certain format. There's also special purpose financial statements, which is what we do mostly. We do some general purpose, which is the clients we got that get audited. But yeah, the special purpose is like a little bit more flexible in terms of like we can present the numbers however we want, but we still got to present the numbers in a certain way.
You don't know how many financial statements I've prepared. It's ridiculous. When I was at EY, I was working in that team a lot as well as the CFO team. My God.
What, did you have to do general purpose or you did? Oh, did you?
Yeah, I did all of it. I didn't tell you that much.
Was it in Word or was it in...
it was in Excel.
Yeah, wow.
Yeah.
That's brutal.
Yeah, hated it.
Hated
every second of it.
I had to do it at like the old place we used to work at. Massive set of financial statements used to take like 3 months and that was pretty much my whole job for the whole year. Like that's what they paid us for.
I like the ones we do because it's like it's like we work with our clients closely and the auditors closely. But when it's your day in, day out.
Yeah.
It's just, and the pressure on the timing, because obviously.
They've all got dates.
They got dates that they're going to present to the shareholders and all this kind of stuff. The auditors ring you up at 9 p.m. I need that set. And it's like, well, you could have,
told me yesterday.
Told me earlier.
Yeah.
Well, I have one story on that. Like I was at the pub on a Friday.
Yeah.
The auditor, who was also at EY, calls me up and says, I need that set of accounts over the weekend. And I said, well, you got to be kidding, mate. Like, I'm not working on the weekend. And I was like, oh, rightio, I'll sort you out this time. And I came in on Sunday and I grinded through it, got it done, sent it to him. I reach out to him on Wednesday and I say, oh, can I get a signed copy of those financials? He goes, oh, actually, we're going to present them differently, so we got to do it again. I was absolutely livid.
Yeah, I can imagine. Do you get a day in lieu?
No, obviously not.
Yeah, not from Big Four, mate.
Yeah, spewing. So yeah, like it's tough work.
Yeah. The financial statements. But yeah, so basically financial accountants, they're just preparing financials. And when you're preparing financials, like what they sort of want to do is they want to get the profit as high as possible because obviously you're going out into the market and the market's going to read your financial statements. You want to put your best foot forward. So like any sort of little tricks they can do to try and get them as best as possible. That's their main goal is to make it look as good as possible.
Generally the people that just present, like that's their only job.
Yeah.
They tell you like, I need the numbers done.
Yeah.
You send me a reconciled trial balance.
Yeah.
And then I'll do it. But they won't change numbers.
Don't change it. No, I reckon like.
No, but even like these ones won't. Like, I mean, the ones that just do it. There's ones that would obviously. But like EY and stuff, they're just they're just reconciling based on your numbers.
No, correct. But then there is
it's really a formatting thing, right?
No, it's formatting, but then there is little things like, all right, what should we do on depreciation and what should we do on amortization? And that's why everyone sort of looks at EBITDA to try and get rid of all the stuff that you can play with, right? But like basically if you can depreciate over 20 years rather than 10, you're going to get a high profit. And then that's what everyone's trying to go for. Like the CEO is going to sit there and go, oh, we need the highest profit possible. So then he'll try and get the accountants to, within the rules, obviously, but they're grey, right? Try and justify certain things that would get you high profit, or even have no amortization, just put the whole thing to goodwill, for example, like if you're doing something. Yeah.
And then the real sexy one last.
Yeah, no, to be honest, this was the one that actually I liked at uni the most, because like this is what we do the most, but like this is what saves you the most amount of money, tax accountant. So, and I'll talk about like how these guys, and then they mix in with the financial accountants after, because there is ways to do stuff. But like the tax accountant only cares about tax. And this was like, to be honest, like I was very tax minded when we were learning at uni, and then when we went to do CA, I was still very tax minded. So like I didn't really understand. Not that I didn't understand, I just never put because I'd only worked in tax, right? I never was able to put myself into a financial accounting or management accounting position and think like, why do they want the profit higher? They're just going to have to pay more tax. Like it seems stupid, right?
But they don't have to necessarily pay more tax.
Correct. And not many people know that. Well, not like even some accountants don't know that, right? But yeah, so the tax accountants only deal with tax matters. So they're just literally preparing tax returns for the ATO and doing all the tax documents and stuff like that. So they care about like all the rules and like around tax and what you're claiming and legislation and stuff. Yeah.
They love tax.
No, they love tax, yeah. And like, man, tax is sexy. Like, like there's some rollovers that you get in tax. And to be honest, a lot of the time the financial accountants, like the financials won't line up with some of the tax rollovers because they're so complex and they just don't make any sense in terms of accounting entries, that like you have to have a side document just for tax to be like, no, the cost base of the shares, even though it says $10 on the financials, is really $5 million because we've done all these complex rollovers that make no sense and forms that also make no sense, to save the client like, millions of dollars. Yeah,
but you see, like if you just work in tax or you just work in financial, it's really hard to think the other way, isn't it?
Oh, it is. No, that's what I meant. Like, so when I was like studying, it was impossible for me to do that.
But like we've been lucky that we have worked in both. Yeah. That you, especially like with our old roles and the current ones, but that we can analyze it and go, well, from an accounting point of view, this is what we need to do. And that from a tax point of view, that is what we have to do. Yeah. And they're not the same.
No, 100%. Yeah. And like, even in exams, I used to struggle with that. But some people only do tax and they'd be like, why do you want the profit to be high? It doesn't make any sense. But then, some people only do financials and they're like, why the hell would you want the profit to be low? It doesn't make any sense. But when you work in both, you want your profit to be really high and low. It's just that you want it to be really high in the financials and really low in the tax return.
When businesses buy other businesses, we see it as well, don't we? Like they can't do a journal. People just don't know what they're doing with that kind of stuff.
Literally, we're very lucky, as you were saying. Like we've worked in both, or like we've worked like along all four, really. But you see the people that have been, cornered for 30 or 40 years in just a tax role, and then you get someone that comes in like a client that is going for funding or selling, right? And they're trying to get their profits still really low. And they don't know how to present the numbers in a certain way. And like they're going to probably tank that person's valuation of this business that they've worked in for so long because they just haven't had the opportunity, or they never took the opportunity to work across all different fields. So the way like most people do it, and this is very common, like is like your tax accountants should only really care about their tax documents and the tax return, and that's what your profit is. And then your financial accountants should only really care about their financial accounts. So like their financial accounts. So when you're going to sell or to talk to a lender, you really only want to show them the financial accounts. That's all they've got to see. They will see the tax return, but that's the real profit that you're trying to present. And then that's the one that you want to get as high as possible. And then the tax accountants who are then going into the ATO, they want to use all the tax rules to get their tax as low as possible.
And that's where we do both.
No, exactly. And we're some of the only people that can do that. Yeah. And that's because like, we've sat on lots of boards and we've had to present to the board how good the numbers are. And that's where this like whole unadjusted EBITDA comes in and things like that. It's very funny. I was listening to Warren Buffett, like he was doing this thing the other day, like just like a little quote, and he goes, "I don't care what unadjusted EBITDA is," like, and he started losing it because like it's just got so ridiculous, like it's so out there that like people are just adding back like normal daily shit, like, you know, like, oh, my coffee's not included because I won't drink it next year, and like it's ridiculous, man. Like just trying to pump their profit, and like obviously with the AI like bubble or whatever everyone's talking about, Warren Buffett just came out. He's like, "No." Like, yeah.
You got to listen to
very
Warren.
funny. Oh, mate, 100%. Like, I was loving these comments. Like, yeah.
Is that you can see through a set of financials, don't worry.
Oh, mate, yeah. He's just like, bring it back to normal. Why is everyone doing this unadjusted, like, or adjusted EBITDA, whatever it is? Like, he's just losing it. He's like, it's bullshit. Like, yeah, it's cash. Like, it's all, yeah, exactly.
What is the cash balance? Yeah.
Cash equals profit.
Yeah.
And that's what we always say. Cash equals profit. Warren knows, mate. Warren knows.
All right, perfect. Thanks, mate.
Yeah, perfect. Thank you.